The big story that we're tracking for you is the decision day for the Monetary Policy Committee of the Central Bank, where it will announce the new monetary policy rates. Channels Television will be bringing you updates at that event, and we urge you to keep your eyes on the station. But let's move on now to the domestic market in terms of how the commodities market is faring. We've seen relatively stable prices across major agri products. However, that does not mean that the prices have begun to drop. Okpebi Oguntade will tell us more about that. She is the Senior Investment Officer at the Financial Derivatives Company Limited. Good morning, Okpe.
Good morning.
It's good to have you on the show.
Thank you.
Talk to us about the prices, which is one thing everybody is very keen about. We want to know how much we'll buy our normal staples in the markets. I know that the prices have been very stable in the past week since we had, I think Ada was here last week. So tell us, how has the prices been right now?
Well, like you mentioned earlier, the prices are still stable. They're sticky downwards. They're still, they're still pretty high. Specifically for a bag of rice is still going between the range of 15,000 to 17,000 for a 50 kg bag. You also have maize. You also have flour that is still remaining at that high range. So what we're seeing in the commodities market is that even though prices are relatively stable, they're still pretty high in the market.
So why are they still pretty high?
At the end of the day, it all boils down to one factor, which is the factor price, exchange rate. The exchange rate has depreciated further at the parallel market as well as the interbank market. What we would have expected with the adoption of the flexible exchange rate is a convergence of rates, but what we're seeing is both markets are depreciating further. And the reason why is because the interbank market, for one, is illiquid. We don't have enough forex to meet the demand in the market. And for that reason, we're seeing that filter into some of our imported commodities, such as rice and other goods that make use of, that have some level of import content. For consumer goods, we're seeing the price of bread has gone up to 300 naira for a loaf, and the reason why is because we know that, for one, bread is a commodity that makes use of flour, makes use of sugar, and these are all imported commodities. So for that reason, we're seeing an increase in prices.
One would think that with the federal government's drive to ensure we increase domestic production of these food items, we would see reduced a level of importation, but that is not the case.
Well, the federal government has tried times without number to try to attain some level of self-sufficiency with some commodities, for instance, rice. But what we've seen over the years is most of the policies that have been adopted, it's almost like as soon as a new administration comes in, it's almost like it's abandoned. For instance, you go back in time to the 60s, before the oil boom, that's the 1960s. There was Nigeria was producing enough rice to meet domestic consumption. You could even say Nigeria was self-sufficient in rice production. But as soon as the oil boom came in, we know that the increase in oil prices affected a lot of sectors in Nigeria, and agricultural sector was one of them. And for that reason, we've seen, what we witnessed back then was there was little concentration or investment in that sector, and over the years it's been dwindling, so to speak. And so the government has tried to implement policies to encourage production, providing credit facilities, subsidizing inputs for production. But what we've seen of recent is that this has not necessarily filtered into the impact or the positive impacts we would like to see in the market, because, for one, fertilizers that was initially subsidized in the market, the government hasn't been able to pay subsidy on fertilizers in over a year now, and most of the contractors for fertilizers are choosing not to sell to farmers anymore because they can't sell at the subsidized rates. They have to sell at the rates at the market, which is about 10,000 naira for a bag. And so we're seeing the cost of inputs increasing. So most traders have to switch over to, products that they know for certain they can import and they can sell, as opposed to waiting for farmers that do not have access to the necessary equipment. Input costs are increasing. And so in Nigeria, self-sufficiency is really an issue. And I know the new administration has started considering methods to ensure self-sufficiency for one, rice. And, going forward, it's more of a long-term solution. But in the short term, we have to be at the rate of the flexible exchange rate. I
actually read the Minister for Agriculture saying that I think by the end of next year, we would see, or end of this year to next year, we're seeing that food scarcity would have be non-existent.
Yes.
Do you think it is working towards that? Because from what we see, there's not much in terms of the impacts. The government may be working at the background, but in terms of the impact on every Nigerian, is still yet to be seen.
Well, that's the thing with economic policies. Economic policies, when implemented, there's a lag between when it was implemented and when you actually feel the impacts on the economy. For instance, with this, using the flexible exchange rate as an example, initially, when we didn't have a flexible exchange rate, there was a lot of uncertainty. There's still a lot of uncertainty in the market, but the level of uncertainty has reduced. But if you're looking at the future going forward, knowing that you could access your foreign exchange at the forward markets at a particular rate. I mean, last week Friday, the CBN was able to settle the forward contracts, and so with that level of certainty, that's an improvement. That's a positive impact.
Okay.
What Nigerians and most rational or economic agents need to understand is that even if the government is at the back trying to implement the right policies to encourage growth and development, it will take a little while for us to see the impact.
Now, if you take a look at the prices as prepared by the FDC of these commodities, let's take a look at them. One would find out that in Lagos, the prices are higher. Could you explain to us why that is compared to a state like Kano and a town like Onitsha?
Well, for one, we know that in Nigeria, most of the agricultural commodities are produced in the north. So transporting the commodities from Kano to Lagos traders would have to incur costs transporting it from Kano to Lagos, and they would also have to reflect that in the prices they're charging for these commodities. So most of, for instance, rice, maize, they are grown in the north. And if you look at what is even happening in terms of logistics, the price of diesel has increased. Diesel is now about 215 naira for a litre from the national average price in June of 183 naira. So for that reason, that's why we're seeing prices in Lagos are higher, because they have to pay for the transport cost from the point of origin to the point of sale.
So what's the outlook for the market? Should we expect any kind of reduction in prices?
For the moment, prices are likely to remain as high as they are. There's no indication that prices are going to dampen any further at this point. But going forward, we hope that the harvest season will kick in fully, and we'll see an increase in supply of a number of commodities.
All right, thank you so much for your time.
Thank you for having me.
Senior Investment Officer at the Financial Derivatives Company Limited.